Hello everyone, welcome to my channel where I talk about personal finance. Today I'm going to talk about three best index funds to have. Let's get into the video. Index funds have gained immense popularity over the years for their simplicity, low cost, and the ability to offer consistent returns over the long term. They are designed to track the performance of a specific market index, such as the S&P 500, offering a diversified and passive approach to investing. Unlike active managed funds, index funds do not attempt to beat the market, but instead aim to replicate its performance, which has proven to be a successful strategy for many investors. In this video, I will explore three of the top index funds that have proven to be strong performers for our long-term investors. Number one is the Vanguard 500 Index Fund, ticker symbol VFIAX. The Vanguard 500 Index Fund is one of the most well-known and widely respected index funds in the world. This fund is designed to track the performance of the S&P 500, a stock market index that represents 500 of the largest companies in the United States. The S&P 500 is often considered a barometer of the U.S. stock market and the economy at large, making this index fund an ideal choice for investors seeking broad market exposure to U.S. large-cap companies. Why VFIAX is a top choice? One is diversification across leading companies. The Vanguard 500 Index Fund offers instant diversification by investing in 500 of the largest U.S. companies. These companies span various sectors including technology, healthcare, finance, consumer goods, and energy. Some of the most notable companies in this index include Apple, Microsoft, Amazon, and Johnson and Johnson. The sheer scale and diversity of the companies in the S&P 500 mean that investors are less exposed to the risk of any single company or sector. 2. Low expense ratio. One of the hallmarks of Vanguard funds is their low expense ratio, and VFIAX is no exception. With an expense ratio of just 0.04%, it is one of the most cost-effective ways to invest in the U.S. stock market. This low cost is crucial for long-term investors as high fees can significantly eat into returns over time. For context, an expense ratio of 0.04 means that for every 10,000 invested, you only pay $4 annually in management fees. The third thing is strong long-term performance. Historically, the S&P 500 has generated annualized return of around 7 to 10% over the long term, making VFIAX a solid investment for those with a long-term horizon. While past performance is not a guarantee of future results, the S&P 500 tracks record of consistent growth over decades, makes this fund a reliable cornerstone of many portfolios. Who should invest in VFIAX? VFIAX is an excellent choice for investors looking to build wealth over the long term through broad exposure to the US stock market. It is ideal for those who prefer a hands-off, low-cost investment strategy and are comfortable with some volatility in exchange for the potential for substantially long-term growth. The second index fund is Schwab US Broad Market ETF, ticker symbol SCHB. The Schwab US Broad Market ETF is an index fund that aims to track the Dow Jones US Broad Stock Market Index, which includes a wide array of US companies across all market capitalizations, from small cap to large cap. SCHB offers even broader diversification than the S&P 500, making it an attractive option for investors who want exposure to a larger segment of the US equity market. Why SCHB is a top choice? One, it is extremely broad market exposure. It tracks an index of over 2,500 US companies, giving investors exposure to the entire US stock market. While large cap companies dominate the index, the fund also includes small cap and mid cap companies, providing a more comprehensive view of the market. This broader diversification reduces the risk that poor performance in one sector or size of the market will significantly affect overall returns. Secondly, very low expense ratio. One of the SCHB most compelling feature is its expense ratio of just 0.03%, making it one of the cheapest ETFs on the market. Schwab's commitment to offering low-cost index funds makes it highly competitive with other major players like Vanguard and Fidelity. A low expense ratio helps ensure that more of your money stays invested, maximizing compound growth over time. Flexibility of an ETF. As an ETF, SCHB is traded on exchanges like a stock, allowing for intraday trading and providing liquidity to investors. This flexibility is an added advantage for those who want the option to buy or sell during market hours. Additionally, many investors appreciate the tax efficiency of ETFs, which tend to distribute fewer capital gains compared to mutual funds. Strong historical performance. Since its inception, SCHB has provided returns that closely mirror the overall performance of the US stock market, with an average annual return of around 8 to 10% over the past decade. SCHB has delivered steady growth, particularly during bullish market cycles. Who should invest in SCHB? SCHB is suitable for investors seeking a low-cost, highly diversified investment vehicle that captures the entire US equity market. It's particularly appealing to those who want exposure to small and mid-cap companies in addition to large-cap stocks. Investors who prefer the flexibility and tax advantages of an ETF may also find SCHB to be an ideal choice for their portfolios. The third top index fund is Fidelity Zero Total Market Index Fund, ticker symbol FZROX. The Fidelity Zero Total Market Index Fund is a revolutionary offering in the world of index fund as it as it charges no expense ratio. FZROX tracks the Fidelity US Total Investable Market Index, which includes a broad selection of US stock across all sectors and market capitalization. Fidelity introduced this fund as part of its zero-fee initiative aiming to attract cost-conscious investors by eliminating fees altogether. Why the Fidelity Zero Total Stock Market Index Fund is a top choice. Number one, no expense ratio. The standard feature of the FZROX is its 0% expense ratio, meaning investors pay absolutely no fees to invest in the fund. While many other index funds boast low fees, FZROX is unique in its fee-free structure, which can be particularly beneficial for long-term investors looking to maximize their returns. Secondly, broad market coverage. Similar to the SCHB, FZROX offers exposure to the entire US stock market, including large, mid, and small cap stocks. The fund invests in over 2,500 companies, ensuring that investors benefit from the growth potential of the entire market. This comprehensive coverage makes it a diversified, low-cost option for those seeking a total market approach. Third thing is solid performance. Although FZROX is a relatively new fund, launched in 2018, it has performed well in its early years, tracking the US stock market's performance with precision. While it does not have the long-term track record of funds like VFIAX or SCHB, its performance so far has been consistent with other total market index funds. The fourth thing is Fidelity's strong reputation. Fidelity is one of the largest and most respected investment firms in the world. The introduction of its zero-fee funds is a testament to its commitment to offering value to investors. The firm's robust infrastructure, user-friendly platform, and extensive resources make it easy for investors to manage their portfolio efficiently. Potential drawbacks of FZROX. While FZROX lack of fees is a huge benefit, there are a few caveats to consider. Availability. FZROX is only available to investors who use Fidelity's brokerage platform, meaning that investors who prefer to use other platforms such as Vanguard or Schwab won't be able to access this fund. Newer fund. As a new fund, FZROX does not have the decade-long track record that other index funds possesses. While it has performed well so far, investors may want to see more data before making it large part of their portfolio. Who should invest in FZROX? FZROX is an excellent option for cost-conscious investors who are already using or are willing to use Fidelity's platform. It is suitable for investors seeking broad exposure to the US market with no management fees. While it's a newer fund, its zero expense ratio makes it hard to beat for those looking to minimize cost over the long term. In conclusion, which index fund is right for you? When it comes to choosing the right index fund, there is no one-size-fits-all answer. Each of the top three index funds I discussed in this video, Vanguard 500 Index Fund, Schwab US Broad Market ETF, and the Fidelity Zero Total Market Index Fund, offers unique advantages depending on your investment goals, risk tolerance, and preference for fees. VFIAX is ideal for those seeking to invest in the largest, most established U.S. companies through a low-cost, proven fund with a strong track record. SCHB provides even broader market exposure and the flexibility of an ETF, making it a great choice for investors looking for low cost and tax efficiency. FZROX is perfect for fee-sensitive investors who want total market exposure without paying any management fees, as long as they are comfortable using Fidelity's platform. Ultimately, the best index funds for you will depend on your specific financial goals and investment strategy. All three funds offer excellent opportunities for long-term growth, making them some of the top choices for passive investors looking to build wealth over time. Thanks for watching this video, and do not forget to subscribe to my channel.